Hey everybody, welcome back to the channel. So today I'm going to be going over the price action of the SPY ETF and where I think we're maybe headed relative to what has occurred and also based on the news that's transpired over the past few days. So let's just hop right into this. So if you guys are following the stock market today, you see that really anything dealing with today's price action is always a continuation of yesterday's. And so I really want to start with going over the price action that occurred over the past few days. If you take a look here, we hit a 323.41 high. You can see on the R side that we were well oversold, well overbought, so we were due for a pullback, and that's exactly what we got. And then it was hard and fast. It dipped, it gapped down, and then it just flat out sold off. Now, I had anticipated a touch of the 294, 295 range just because this was a solid support level, and it was a very obvious one, and it was the closest major support. And what has occurred is that when it gapped down, it actually literally sold off right at the 300 support. Then the next day, it got bought up in the morning to 308, sold off, and then got bought all the way back up again halfway to 304. All right, so and then from here, it gaps down and then gets bought all the way back up. Now, what occurred over the past few days is Jerome Powell stated that he's going to start purchasing corporate bonds, which is another intervention of the Federal Reserve, in my opinion, interfering with the free markets. So I totally understand the importance of the Federal Reserve and the government having to intervene and ensure that we don't have a depression. I get that. These are very unprecedented times, and it requires unprecedented action, and I should say unprecedented actions and measures. However, I do think that there should be a balance between how much do we intervene and how much do we just allow the markets to play out. So if you guys, if you're not already aware, which I'm sure you are, a lot of the companies came out with really poor earnings, and they had changed guidance for their first quarter earnings, and then they also changed their guidance for the second quarter and just basically lowered it and stated that, hey, we're not going to, we're not going to meet the guidance for the earnings and whatnot. And the market responded favorably as a result of that information, and that's because of the Fed injection. So as a result of that, we had this ridiculous huge run up on all of the news. You look at, from the lows of 218.26 all the way up to the highs here from the rebound 324.40. This was just bad earnings after bad earnings after bad earnings. COVID deaths, COVID increased infections. It seemed to be the more bad news, the higher the unemployment, the more the stock went up. So I'm asking myself, okay, when is this going to at least take a breather and balance out some, right? When are people going to start taking some profits? And when I mean people, I'm really referring to the large corporations and institutions, because they control like 70–80% of the stock market market cap. And we get to this point, the RSI hits oversold, I keep saying that, overbought. And then, okay, great, this is probably, we're going to at least come back down here and touch this 296 support. That's only a 10% pullback. That's nothing considering we had a 40% run up in literally 2 months, which is just, it's unprecedented. And as of right now, we're waiting. Okay, we got that red day, which is a good entry point. We see the RSI start to break down. Beautiful. This would be a great entry point to short. My target would be the 295 level, and we have that huge gap down day. It's never a bad thing to take profits on this, right? Anytime you can outsmart the market, or at least roll with the trend when the stock market is trying to fake you out and give you all the psychs and the confusion throughout the day, it's never a bad thing to take profits. So if you had taken a little bit here and left a little bit on the table to try to get down to this level, I wouldn't have blamed you. But then the very next day, the market decides that, nope, we're not going to treat this as the support level. We're going to cut you off sooner than that. We're going to make 300. They made a brand new support level. All right. Sure, you had this support back here in the 300 range, but I really was anticipating this being the support level that it tested, considering just how strongly it sold off. And the market does what it always does. It pulls a psych, a fake out. It gaps up the next day immediately, right, to trap all the shorts. Begins to sell off. Shorts start feeling comfortable. Okay, great. Now we still have the trend. And then it gets bought back up. You're like, okay, well, the trend is still intact for the short. We're going to still try to get that retest of that 300 range. The market knows that. And then it literally reverses. And what occurred here is this is around the time. So basically, if without the news of Jerome Powell stating that he was going to, or I should say that the Federal Reserve is going to start purchasing corporate bonds, without that, I think we absolutely would have touched the 300 support at least, if not probably even more than that. And I think that they saw that. And this is just, my belief, just based on, this is what they do for a living. Their job is to watch the markets. So they saw that the market was starting to get exhausted. Everyone and their mother saw that, okay, this is a ridiculous run up. This is time for a pullback. We started to get the pullback. Everyone's at the, chomping at the bit to enter into all their top stocks like Apple and Microsoft and Google and Facebook and Amazon and all their other stocks, Visa and whatnot. And okay, great. We're going to get a nice pullback probably. Mr. Powell comes out and says, nope, we're going to start buying corporate bonds. And the market responds like, oh, okay, cool. Bull market attack. Okay. So my last video, I stated that I thought that, we were still going to see a little bit of runoff. And I still think that could take place. As of this recording, the SPY is a little bit down. Excuse me, not the SPY. Well, yeah, the SPY in the after hours, it's a little bit down. But if you guys have been following the markets, for any period of time, the markets are great at dropping or looking red in the evening and in the early mornings, and then the next day they rip higher. And then vice versa. They start up high after hours and in the morning, and then they finish lower. That's just what they do. So as of right now, it's finishing a little red. So it's a little bit below their close here. But if you just take a look here, it went up, went solid green, which is not quite a bullet engulfing candle, but pretty close. And then it pops up, and then it gets sold off, and now it's a little red. So is my short bias still intact? Well, I'm not as confident as I was a few days ago. And I say that just purely because the federal government, I call it federal government, quasi-federal government, Federal Reserve. I mean, they're the closest thing as you can get to God on this earth in terms of finances, right? I mean, they control the flow of markets with the snap of a finger. And so when they come out and they say, hey, oh, yeah, by the way, so we see, they didn't say this, but this is what I heard. Yeah, we see you guys are starting to get a little skittish and the market's starting to sell off. So, yeah, you know what? We're going to start buying corporate bonds now. And then, so how do you fight that, right? So, this is unprecedented time because we have the federal government interjecting in the free markets, unlike any other time in the history of the stock market. Even more so than 2008, when literally we were on the brink of collapse of our entire economic system. Even back then, if you guys followed the last video, I touched on this. Even back then, there was no bounce in the manner that happened here. I mean, this is just, anyone who's been trading, investing, no one possibly could have anticipated this type of run up. And now people are asking themselves, as I move forward back to the here we go, to the end of the chart. People are asking themselves, okay, great. So is this it? And I've already touched on the fact that, we're in the market 11 years in a bull market. We have a ridiculous run up. And I think overall in the next few months, I am still bearish. I have not changed my sentiment on that. And I've already kind of reiterated, well, let me rephrase that. I'll reiterate my points that I mentioned in my last video. It's just that there has to be a significant pullback just so that the markets can take a breath and things can recalibrate. So with the injection of the capital that the Federal Reserve has put into the market, that is going to cause significant inflation, more so than the typical 1.7% that we've been encountering. So everything's good now until a gallon of milk is $5, right? I mean, you just can't negate the fact that we have a lot more liquidity in the markets than we should, and it's just purely pumped money. So are the markets responding? Are the markets responding favorably as a result of that? Sure, yeah, of course they are. I mean, literally, the Federal Reserve told them, don't worry about your earnings. Don't worry about if anyone buys an iPhone or subscribes to your service or whatnot. We're just going to go ahead and just support you. How's that sound? I mean, it's literally free money. It's like your job literally telling you, don't even worry about going into work. We'll go ahead and pay you. Oh yeah, that's right. They did that too, right? Layoffs. Get laid off, don't worry about that. We're going to go ahead and give you, $4,000 a month to sit at home indefinitely. And I get it. They had to do it, You have to make sure that people can pay their mortgages and the bills and put food on the table. But there's a cost to that factor, and the cost of that is significant and much more expedited increase in inflation. So I digress. We're at this market here right now. We're in this in this gap up that's sold off. It's showing a little red right now. We are still overbought, if you ask me. Even in the wake of this entire run up, there needs to be at least a 10% pullback. And in any relatively healthy market, in any run up, you would see that. A 10% pullback on a 42% run up. I mean, that's you kidding me? You probably would see two of those by now in a typical market, and we haven't. We've yet to really even see one. We saw this little pullback here, but it just immediately got bought up in a matter of 3 days. So just unprecedented times. So, like I said, if a typical chartist, a typical a trader looks at this chart, should be and would be bearish. However, the Federal Reserve injecting all this capital and just, totally just putting the cheat code into the game, because that's exactly what's happened. They put the cheat code into the game, so their Madden player is on 99 right now, right? So, I'm still going to stay short on this. I'm still looking for at least a comeback and touch here. Anyone who is purchasing at these levels, I would highly recommend that you do so in very small amount sizes relative to your account size. If you want to put 10% in, or an extra few thousand, a few $100, whatever, what have you, you can't go wrong with it. But the smart, very astute thing to do would be to wait for a pullback on a significant support level. And I think asking, a 10% pullback is just, that's not asking much. That's been very astute. That's been being very smart. And that's what I would do. So, could this go here and just run up again tomorrow and pop up and just run to all 340s and whatnot? Yeah, of course it can. If you take a look at, let's go back here. Let's take a look at my beloved Apple, as I am probably going to almost reference in every video, because this trades like an ETF basically. It is literally less than 1% off of all-time highs. 40 million people are laid off, and Apple is back to all-time highs. Now here's the crazy thing. If you go back here, right, before we had even heard of COVID-19, you go back here, people were saying, Apple is way overbought. It's due for a pullback. 177 to 324. It's due for a pullback. And it pulled back. And then it got bought right back up. Just unheard of. So, with that said, do I think that we should see a pullback here to at least 325? Of course we should. Is that going to happen tomorrow? Who knows? Is it going to happen next week? Typically pullbacks, they usually come out of nowhere. They usually come out of, overnight with some news that comes out. It's very quick. It's very swift. This could still be the beginning of a pullback, right? We have two significant red days. We have it attempting to go back and reestablish the highs, but then this could very well, do a retest, which happens a lot of times, and then it rolls over, right? And then it rolls over. So, again, I am still, my logic says to be short in this. And even if I am going to be long, I'm not going to be long until I can see some type of significant pullback off the support level. If you guys are looking to get into the market, if you're not quite sure, like, as I stated in my last video, whether you are bullish, short term or long term, and if you want to start adding it to the markets, do so when it comes back and test this level here. This is still a significant level. This is a smart entry point. And this is what I'm going to be waiting on. Anything in between this, for tomorrow and whatnot, I'm just going to be scalping, right? So try to get a few dollars, just to, say that I, made some profits and chose the right intraday direction. But in terms of like investing and whatnot, I'll be looking for this target here in the 300, 293 range. Right? And yeah, that's about it. So, we will know sooner than later the direction of the market tomorrow, and we will go from there. And I will be providing a video tomorrow after hours to see exactly, the direction of the markets and where I think we're heading based on that. So if you guys have gotten to the end of the video, thank you so much. I really appreciate your watching the video and support. Hopefully you've gotten some quality content out of this. If you haven't already, please make sure that you guys like and subscribe to the video. Well, I should say, don't subscribe to the video, subscribe to the channel, like the video, and also comment on it. Are you guys, you bearish or bullish right now in the current market sentiment? If you're not, if you are new to the channel, this is a financial education channel. So a lot of what we do here is financial training, informing with, the best credit cards or investing advice, just overall financial news and information that can help empower you guys and help build your wealth. But in addition to that, I do also make stock trading technical analysis videos based on the market so that I can help new traders and even help seasoned traders who just need to get an additional opinion and additional idea on the sentiment of the markets. So thank you guys so much for tuning in, and I'll talk to you later. Take care.